Let's get one thing straight. The credit card was never meant to be a debt trap. Its original purpose was simple: to make life easier, not to lure people into a cycle of borrowing and interest payments. The idea was to offer a tool that could help you manage your money more efficiently, not to create a burden that would follow you for years. In the 1950s, when credit cards first appeared, they were all about convenience. Imagine a time when carrying cash was the only option, and paying for a meal or a purchase meant fumbling for bills and coins. The credit card was a revolutionary idea, but it wasn't about borrowing money you didn't have. It was about making transactions smoother and safer. The story goes that Frank McNamara, after forgetting his wallet at a restaurant, came up with the Diners Club card. This card allowed people to pay for their meals and settle up later, but the key was that you always paid the full amount at the end of the month. There was no option to carry a balance, no temptation to pay just a little and let the rest roll over. Early credit cards were actually charge cards. You could use them throughout the month, but when the bill arrived, you had to pay it in full. There was no such thing as minimum payments or revolving debt. The system was designed to help you manage your cash flow, not to encourage you to spend beyond your means. No minimum payments, no interest, just a tool to manage cash flow. If you used your card responsibly, you paid nothing extra. It was a way to keep your finances organized, to avoid carrying large amounts of cash, and to enjoy a little more flexibility in your daily life. Merchants paid a fee for the privilege of accepting cards, but disciplined users, those who paid their bills in full, never paid a cent in interest or penalties. The system rewarded responsibility and careful budgeting. Fast forward to today, and the landscape has changed dramatically. Now the credit card industry makes most of its money from people who don't pay their balances in full. Interest charges, late fees, and penalties have become a major source of profit for banks and card issuers. Carrying a balance is now the norm, not the exception. Many people find themselves stuck in a cycle of debt, paying only the minimum each month and watching their balances and the interest they owe grow over time. The card has shifted from a simple cash substitute to a source of easy but often expensive credit. What was once a tool for convenience has become a way for many to spend money they don't have, often at a high cost. What began as a tool for the responsible has become a potential financial trap for the unwary. The ease of swiping a card can make it all too easy to lose track of spending and fall into debt. The original purpose, convenience, has been lost in a maze of fees, interest rates, and complicated terms. Today, it takes real discipline and awareness to use a credit card as it was intended. Remember, credit cards were designed for those who could pay in full, not for those who needed to borrow. Used wisely, they're still a powerful tool for convenience, but lose sight of that, and they can quickly become a costly burden. Credit cards were once reserved for the financially stable. Now, offers flood your mailbox and screens, targeting everyone, even those with shaky finances. Pre-approved limits and delayed bills make overspending painless in the moment. Minimum payments keep you in debt for years, not months. The card is no longer a cash flow tool, but a lifestyle enhancer. Funding wants, not needs. It bridges the gap between your income and your desires, but at a steep cost. The result? A cycle of borrowing that's hard to escape. What was once a privilege is now a pitfall for the unwary. Paying with cash hurts, a little loss you feel in your hand. Credit cards erase that pain. Tap, swipe, click. Spending becomes abstract. You don't see your balance drop or your wallet thin out. This frictionless process makes you less price-sensitive and more impulsive. Studies show we spend more with cards than with cash for the same items. The system is designed to make spending easy and thoughtless. The bill is a problem for your future self. Would you drop $80 in cash on a whim? Probably not. But on a card, it's just a tap. The card subtly rewires your habits, focusing on instant gratification. The real cost is hidden until the statement arrives. We fixate on interest rates, But the real danger is time. Time is the silent thief that makes debt grow larger and more unmanageable. Interest only hurts if you let debt linger. The longer it lingers, the more it compounds, turning a small debt into a mountain. Pay in full each month, and the rate is irrelevant. You avoid the trap of compounding interest and keep your financial freedom intact. Carry a balance, and you're renting money, daily. Each day you owe, you pay a little more, and that adds up quickly. Minimum payments stretch this rental for years, barely denting the debt. It feels like progress, but it's a mirage. A $2,000 balance can take decades to clear if you only pay the minimum. The interest piles up, and the principal barely shrinks. You end up paying for the same purchase many times over. What seemed like a good deal becomes a financial burden. The longer you owe, the more you lose. Money that could be saved or invested. Every pound spent on interest is a pound not working for you. The true trap isn't just high rates, but long-term borrowing. It locks you into a cycle that's hard to break. Every month you carry a balance, you're feeding the fire. The flames of debt grow higher and harder to extinguish. Time is the oxygen for debt. Deny it and you win. Cut off its supply by paying off your balance quickly. Don't let debt become a permanent fixture in your life. Take control, pay it off, and reclaim your financial future. Rewards programs sound great. Cashback points, air miles, and exclusive offers. But who really pays for them? Usually you do, often without realizing it. These perks are designed to make you spend more, not save money. 1% cashback is nothing if you end up paying 20% in interest charges. The lure of rewards turns spending into a game, encouraging extra, often unnecessary purchases. If you always pay in full and only buy what you need, you might come out ahead. But most people spend more chasing points than they ever get back. For the majority, rewards mean more debt, not more value. The house always wins in the end. Credit card debt often starts with a one-off emergency or special event. You promise yourself it's temporary, just this once. But life happens, and next month's balance doesn't get cleared. Soon carrying debt feels normal, especially for those with steady incomes. I'll pay it off when I get my bonus, you think, but lifestyle inflation keeps pace. The abnormal becomes routine, a constant background stress. This slow creep traps millions, not because they're bad with money, but because habits change quietly. Each month you pay a bit more than the minimum, but the debt lingers. Years can pass, draining your wealth and blocking real savings. Breaking the cycle means refusing to accept debt as normal. Let's pause for a moment and get real. Grab your last few credit card statements and take a close look. This isn't just about numbers, it's about understanding your habits and your relationship with money. Have you managed to pay off your balance in full every single month? If so, you're not just using your card, you're mastering it. You're avoiding interest, building credit, and making your card work for you. But if you're carrying a balance, or worse, watching it slowly creep up month after month, that's a red flag. It means your spending might be outpacing your ability to pay, and debt could be quietly piling up. Now, add up all the interest you've paid over the last few months. Compare that number to the rewards or cashback you've earned. Are you actually coming out ahead, or are the perks just a distraction from mounting costs? If you're paying more in interest than you're gaining in rewards, your card is costing you far more than you think. It's not a benefit, it's a burden. Take a closer look at your purchases. Were they for things you truly needed, or were they wants and impulse buys? How many times did you swipe without thinking twice? Credit cards don't change who you are. They just magnify your habits. If you're disciplined, they're a powerful tool. If not, they can quickly become a trap. Remember, the card itself isn't the enemy. It's all about how you choose to use it and the decisions you make every time you reach for your wallet. So audit your usage, know exactly where you stand, make a plan to pay down debt, set spending limits, and track your progress. If you need to, don't hesitate to cut up your card, lower your credit limit, or set a strict budget. Sometimes taking control means making tough choices. Remember, knowledge is your greatest power. With the right mindset and habits, you can turn what feels like a trap back into a tool that works for you, not against you.